welcome to today's game plan. It's on a little bit of a delay. We had some technical difficulties, but we are back. I'm going to give you all the information you need to know for today, the rest of the day, a breakdown of the Federal Reserve, a breakdown of everything going on in the markets, including today's economic news. We're going to look at charts for trading today. We're going to look at crypto, and we're going to look at commodities. All right, so first off, yesterday, Fed raises by 25 basis points. 25 basis points, totally expected. What we weren't expecting was a more dovish tone. For instance, Jerome Powell said, and this is something where I saw the dollar decline instantly when he said this, he said, we realize as the Federal Reserve that there's a lag in monetary policy, meaning that they're raising and they've continued to raise, but there's a 6 to 12 month lag before it hits the economy. All right, so right off the bat, that's important to understand. All right, so they're saying that, which means they're going to be more hesitant. It's a hesitation in further rate hikes. Now, if we see inflation start to uptick, they may have to go back to hiking. But right now, to me, that tells me there's a wait and see attitude. ECB this morning raises 25 basis points, says the same thing as the Fed, says they're data dependent. Okay, so a couple things to go over here. This morning, we got GDP numbers, 2.4%, better than expected. This economy, folks, while you do have certain economic factors that are weak, the main headline numbers, jobs, as well as GDP, very, very strong. The consumer, while growing more and more in debt, is still spending money hand over fist. Credit card debt now north of $1 trillion, the highest of all time. The amount of money that people are spending on housing alone is at an all-time high. It's at 40%. 40% of income being spent on housing, yet the consumer is saying, you know what? We are just going to continue to spend money, probably partly due to the stock market going up, makes them feel richer, and partly due to the fact that we've become children. Everything's about bailing us out. The Fed will bail us out. The government will send us checks. No big deal. Let's just spend, spend, spend. After COVID, we had this urge to just spend very hard. Once you start spending money and living a little bit freer, we know it's very hard to cut back to where you were prior. All right, a couple other things. So GDP coming in better than expectations at 2.4%. Expectations were 2%. Durable goods orders coming at 4.7% this morning. That was better than expected as well. However, this is the kicker. What wasn't better than expected, if you take out transportation from durable goods, guess what? It was lower than expected at just 0.6%. So again, this is where it is, right? This is what kind of market we're in. We're in a market that's euphoric. We're in a market that wants to continue up, that people had money on the sidelines. They want to chase things like stocks in like Nvidia, or in this case, Meta today after the earnings from Meta. I'll talk about that in a minute. But then we do have underlying economic data that's a little bit weaker, a little bit weaker. Now, one number that wasn't weaker was jobless claims today. About 6 weeks ago, we saw jobless claims spike to about 260,000 or so for 3 weeks in a row. We've come right back into 220,000. Today's number, 221, lower by 7,000 jobs from previous week or the previous week. And again, folks, what that tells us is there's not a lot of firing. There's not a lot of people filing for unemployment. And that's what that number is, folks. The initial claims are how many people are claiming unemployment. And so the reason why you pay attention to this is if that starts to spike, and usually the kicker is this, I'll tell you what to watch for. Watch for 300,000. If we get above 300,000, that's major trouble for the economy. As long as we're below 300, it's not that bad. It's not that bad at all. All right, a couple other things that got my attention. Bank of America said expect crude oil to go to $90 a barrel. Guess what? It's already at $80. So that's not that big of a stretch. Remember what I said, though, and this is why I think this is the most important thing I'm going to say today, and we'll get into charts and all that stuff in just 1 second. But check this out. The fact that we're seeing inflation, meaning food and energy, spiking higher, and remember, yesterday in the stream, I showed you guys the chart of gasoline at 52-week highs. Oil not that far away from 52-week highs. Month over month, both are up 15+%. So month over month inflation jumping substantially. Year over year is almost flat now. If we also looked at the DBA, which is the agriculture ETF. It's at 52-week highs, up big this month. So again, by the way, look at orange juice. Orange juice skyrocketing as well. Not that that's a big one, but I think it's just another commodity that is going parabolic. These are going to have an impact. And if we're saying now, and the Fed has said yesterday, this was big, the Fed's people said no recession. no recession. And if that's the case, and we're going to start to reaccelerate in the economy, then you have to expect inflation to reaccelerate because demand for commodities is going to rise, as well as if people are doing better, demand for all products are going to rise. So everyone was so happy about the consumer price index last month. Get ready, guys. It's going to start upticking. And the key is going to be is if it upticks, how does the Fed react? Do they have to go back to raising rates? Do they say, hey, we aren't going to cut till 2025, which is kind of what they're saying right now. And by the way, yesterday Jerome Powell said that. He said, don't expect us to cut till 2025. That's a lot of time where rates remain very, very high. But remember, after yesterday, we're at a 22-year high on interest rates, 22 years. All right, we're going to get into some charts. Let's move over to this camera right here. I want you guys to take a look at Meta. Meta pre-market is up about $28 here or so. Big move up on Meta, but look at this, guys. We have a parallel channel that predicted this price action potentially getting up here. And if we go back here, and we can see, again, if I move back, this channel, again, goes back quite a distance, all the way back to the 2012 lows when Meta became public, right? So here's your public level. Connect this low right here, and hopefully you guys can see this, to this level right here, and it gives us this line which connects through this one, through these lows, and guess what? We're trading right there. So for me, Meta also filling a big gap on the daily chart. If we go to the daily chart here on Meta and we take a look, if I zoom out just a little bit, there's a huge gap fill right here at the same level, right around 225, 227, right here from that big gap down right there. That to me tells me there's resistance here. Great earnings, and by the way, again, they're taking a lot of business from Twitter. Advertisers ran from Twitter. They're now right back on and doing Reels and doing, Facebook and all these things. Instagram, more and more money there. That's great, obviously. We've seen that be good for Meta versus Elon Musk and Twitter/X. Interestingly enough, if you don't believe that there's going to be a cage match between the two of them, right now Zuckerberg is winning the business aspect of it. We'll see if that continues. All right, so a couple other stocks here that I want to go over, guys. Chipotle Mexican Grill, CMG, reporting worse than expected numbers. The stock is getting hit here. The level I'm trading today is right down here, guys, at this gap fill. 1780 right in here. There's a big gap fill. That will be first technical support. Second technical support will be right at this pivot high and this pivot high, and that's at 1733. So those are your two trade levels for that. Now, RCL, Royal Caribbean, big earnings here. The stock is up substantially. Amazing recovery on the cruises. People after COVID and people weren't that excited about cruises. They were saying, are people going to cruise again? And the answer was apparently yes, because look at this move up here from basically $20 to $30 all the way up to 112 pre-market. Now this is getting interesting because now we have some levels to trade against. All right, so right off the bat, I'm looking at a level. You can see this pivot high right through this pivot high, right through this pivot high, right through this pivot low, right here. This is right around 115. So 115 starts to get interesting. And remember, these are not long-term investments on the short side. These are swing trades or day trades. That's it. So quick in, quick out, tight stop, whatever you want to do, manage your own risk. That's important. If it goes and continues up, you have an amazing triple top up here, and that triple top is around 135. That would be an absolute insane move if it got up that high. That is something to watch. McDonald's is trading a little bit higher here. I'm not even going to spend time here because needless to say, I think it's trading up about 40 cents on earnings. Minimal move on earnings. You can see actually down about 40 cents. My fault. Here's where it closed yesterday. Here's where it's going to open. It's going to open about 40 cents lower. All right, next up, LUV, and we're going to keep busting out these charts, guys, because I got to get to crypto and I got to get to other things as well. And by the way, I think I mentioned it, but the ECB raised 25 basis points. That was another key thing. And I do have something else that I think is going to blow your mind when I show it to you in just a little while. All right, so here's your chart of LUV. Southwest Airlines had a big run, but it is coming down. After earnings, it's trading at $33.93 pre-market. And again, it closed at 36 yesterday, 36 and a quarter. Where's your technical support? I'm going to even draw a trend line in here so you guys can see it. This is an obvious support technical level for a day trade today, 32.60. 32.60 approximately right there. I think we can all see right here, this area of support right through here. There's also a gap fill just below that. So let's call it 32.50, whatever you want to be in that particular level. Crocs is a very thin stock. It is taking a hit on earnings, down about $6. Don't really have much on this. The only thing I would point out here on Crocs, there's a little bit of a level right here. That would be a little bit of minor support at 107. Notice the connector from this low to this low, which perfectly connects to this low. That's at 107, about $6 lower. Watch for that level. All right, we're going to move over here, guys. I want to take a look at crypto. All right, so we're going to get to crypto. Now, crypto, we have Bitcoin still trading below the range. As long as Bitcoin's below the range, it is vulnerable to a drop. Okay, so again, yes, it's had a couple up days, but remember, these couple updates are coming on the back of the Fed saying what they're saying here and all these other things. So again, the fact that we're not back above 29.9 to 30,000 is a little problematic. Doesn't mean it can't happen, but again, that's a little bit problematic. Watch again, are we creating a bear flag here that could divulge into a bigger move down? Guys, I already showed you this trend line just in the last day or so, but I want to redraw it in. This is my short-term target. This is a major trend line, 27,000 or so right there. And again, not sure why it's not going up on the screen there, but either way, again, that's something that I am watching very, very closely. Going back to over here, I want to show you the Ethereum chart. Okay, so let's go to the Ethereum chart real quick. The Ethereum chart is remaining in this channel, downside vulnerable to this level. This would be the equivalent of that 27,000 level hit on Bitcoin. So if we get down to about 1770 or so, that's your support. That's the level you want to hold on Ethereum. If it breaks below that, trouble brewing. As long as it stays at or above that level, honestly, just like Bitcoin, Bitcoin stays at 27 or above, it's okay. Not that big of a deal. Okay, next up, I want to show you guys this. And again, just real quickly, we'll go to charts of silver. I want to show you silver here, guys. Silver, to me, is getting overbought short term. I'm a little concerned just in the near term with silver because it is an industrial metal. So all of the hope of avoiding a recession can be problematic. And again, we've rallied up. We are near resistance. Eventually, I think it breaks out of this downsloping trend to the upside, but I do think you could be due for a pullback here. I would look at a pullback connecting these lows right here, so right around $22. I'd be a buyer at 22. I'm not a buyer at 24.60 or so on the chart. All right, the last thing I want to do, folks, is I want to show you guys this, right? So, and I can't show it to you because the screen over here is not working, not a big deal. But what I do want to show you guys is in 2008, I have an article here I'm reading. January 17th, 2008, Bernanke said Fed is not forecasting a recession. And the article reads, Federal Reserve Chairman Ben Bernanke on Thursday told lawmakers that even though the U.S. economy is facing a difficult combination of circumstances, the Fed is not forecasting a recession. The U.S. economy remains extraordinarily resilient, the U.S. Central Bank chief said in answering questions about testifying before the House of Representatives Budget Committee. All right, I want to leave you guys with this. So, number one, yesterday, what did the Fed say? We are not forecasting a recession anymore. What happened in 2008? In early, Bernanke and the Fed said we're not forecasting a recession anymore. We know that there was the great financial crisis that occurred later that year. Okay? Does it mean that history will repeat? Not necessarily, but it is something you have to be aware of. Lastly, I'll leave you with this. Puts on the market are the cheapest since '08. In early '08, when no one was forecasting a recession and things were at all-time highs, puts again were as cheap as they are today. Puts again are how much it costs to bet on downside. It means it's very inexpensive because no one's expecting it. The other thing is, the Dow has had 13 straight up days. The last time the Dow had 13 straight up days, you know when it was? 1987. What happened in 1987? The stock market crashed. Now, I don't want anyone out there to say, oh, Gareth's predicting a crash. I'm not necessarily predicting a crash. What I am saying to you is this is a time when you see everything going up and you want to FOMO into the market, when you want to be like Bitcoin and be like the individual you probably were at 68, 69,000, sometimes this is a time to sit back and be patient. Because again, instead of buying at 68, 69,000 on Bitcoin, a lot better to buy right now at 29, even if it goes down, much better than 69,000. In 2008, It was much better to wait. You would have gotten a 66% discount by waiting until March '09 to buy the stock market. Again, these are things that you have to be aware of. These are stats that I bring to you. I want you guys to make an informed opinion. You still want to buy the market? Go ahead. I'm all for it. You make your own decisions. That's what it's all about. But I want to give you guys a balanced view because there is so much bullishness out there. You got to have both sides. You want the bear case and the bull case. You'll get the bull case by turning on CNBC or crypto Twitter/X. The bear case I'm bringing to you. I'm one of the last standing bears out there. I don't believe for a second we are out of the woods. I don't think it's going to happen until the end of the year to early 2024, but I do think there's trouble brewing. Be careful out there, guys. Take care.